Welcome to No Nonsense Nonprofits. Hi, I'm Sandy Ray, founder of Sandra E. Ray, CPA, where we alleviate financial headaches so that you can create a bigger impact. Today, I want to talk about achieving financial resilience for your nonprofit organization. We're going to discuss how we can navigate through financial uncertainty, whether it's due to funding shifts, economic downturns, or disruptions of any kind. We're going to explore some strategies to help your organization stay strong, adaptable, and impactful. So let's get started. The first thing I want to talk to you is our good old cash flow projections. That is the best way to know where we're going to be in the future, given our current stream of cash inflows and outflows. It's really crucial for identifying periods of cash shortfalls, and so we can plan to have funds in place to cover where we're going to be putting more cash out the door than we're bringing in. One of my favorite things to do, and I know you've heard me talk about it a lot, is a 5-year budget. I love a 5-year budget. I know it's hard the first time, but it's really easy after that. It's no more difficult than an annual budget. What we're going to do is you're going to project out for 5 years. You're going to take into account the activity that you have now and where you and the board have decided that you want to be in 5 years, and breaking that down into financial income and outflows so that you can every year determine how close are you going to get to that. Are those strategic goals financially feasible? And again, every year we just update that. We have better information for the future years, and we can update all 5 years just as easily as we can update 1 year. It really makes it simple because you've done the hard work for the first 5 years, and it really is just a matter of updating. I love it. Another simple tool that I want to talk to you about is the shorter period of time. We break it down monthly, whether you want to do it for a 12-month period, whether it's the fiscal year that you're in now, or you want to do it for a 12-month period where you look back 6 months and look forward 6 months, and then just keep going and have it roll. Like the last month drops off and then you pick up a new month. And you could do it for more than 12 months. But basically, I take the budget for 12 months and I drop that into an Excel spreadsheet. And then once we close the month, I go in and I update that tool for last month's actual. I remove the budget numbers, I put in the actual. I have my beginning cash balance, I have my ending cash balance for each month, and I can see what is going to happen to our cash balance for the remainder of the period or for the tool, depending on how you're using it. But it's a great way to say, okay, this is what we've done this year. This is what we plan to do. This is where we should be ending up. Now, having these tools in place gives you the opportunity to plan for those cash shortfalls, which obviously is going to reduce your stress, but it also helps you and the board make very proactive decisions to plan for those time periods. Another thing I want you to consider is an ongoing dashboard. Key metrics play an important role in keeping track of what your goals are and how are you getting there to complete those goals. So obviously cash flow projections is one of those metrics. What do we anticipate our cash to be in the next 30 days? Some financial ratios might work. Quick ratios like what's our current assets versus our current liabilities? If you've got program service income, what is our receivable turnaround? How many days does it take us from the time that we bill to the time that we collect? That has a big impact on your cash inflow. What kind of funding diversity do we have? Do you want to have like a pie chart or a goal of a key performance indicator that shows how diversified your revenue is? So something that you can look at. Maybe you don't want any one funding source to be more than 30 to 50% of your total income. And we're going to talk about revenue disruptions a little bit later, but as we all know, a disruption in that big a chunk of income is really going to affect our operations. Another key performance indicator would be items that relating to expenses. For example, cost per constituent would be a great key performance indicator. We want to track that over time, but we also want to have a goal in mind of what we want to achieve. So having this information ready at hand, simple updates to what we're working on, and making that part of our reporting process is essential in providing us the information that we and our boards need to make those informed decisions and make them as quickly as possible and feel confident that those are the right things that we need to do. So once you've got those in place, we've alluded to this, we want you to have a contingency plan. Again, diversifying revenue, whether it be online campaigns, corporate sponsorships, membership programs, investment income. Look at your income. Where can you grow? What new sources of income can you add? And what is making you a little bit nervous because it is a big chunk of your revenue? Having a reserve fund. Planning for that reserve fund, putting money away for a rainy day. If you don't have one at all, shoot for 3 months worth of operations. If you've got 3 months, shoot for 6 months. If you've got 6 months, go for that year. And if you've got that, look at setting up that endowment fund where you're going to be having the ability to have investment income plow into your operational budget and provide that sustaining source of revenue that you don't have to rely on anything but that fund that's available to you. Securing emergency funds. You may want to go to your credit card company and increase your line of credit. Not saying that you need to use that full line of available credit on your credit card, but that it's there if you need that. In the same vein, maybe going to your bank and getting a line of credit with them. Again, not saying that you're going to use it, but it's there if you need it for emergency purposes. And then, of course, looking at our expenses, are we going to be making any cuts as part of a contingency plan? We want to make sure that we are, if necessary, able to cut and know what we want to cut prior to any events happening that would require us to implement our contingency plan. And then the last thing I want to talk to you about is staying compliant, keeping up-to-date financial information. You all know I love my checklists and my calendars. They help me remember what is due every month, every quarter, every year. Getting those 941s done, your 990 done, those charitable solicitation registrations, all of those things that we don't do on a regular basis or on a daily basis. So we want to make sure that we're staying compliant. We don't want to forget something and then have to pay a penalty or rush to get a report out at the last minute because, well, something else is going on. We just want to, it helps keep life stressful. So however you do that, make sure that you have that recurring reminder of things that are coming up. And then staying compliant with regulations, whether they be regulations regarding your niche. I mean, we're all nonprofits. We all have to stay current on those regulations. But some of us have to be compliant with HIPAA, or some of us have to be compliant with food safety regulations or requirements. So find yourself a resource where you can stay compliant with those types of regulations and regulatory changes. And then also a resource where you can stay compliant with state regulations or federal regulations. State regulations that change, for the most recent example I can think of is that many states are bringing on these additional payroll taxes or, complications to your payroll system where they're allowing employees to contribute to a state-sponsored retirement program. And employers are required to actually withhold those contributions from the employee's paycheck and make the contribution to the employee's account, generally through the state's website. It's not difficult, but if you're not doing it, you could be subject to penalties. Another thing, in addition to that, is there's a lot of states they're adding like Family Leave Act type of taxes. So paying funds into the state Family Leave Act account, similar to unemployment, but it's for family leave. In some states, it's employer only. Some states, it's a combination of employer and employee. And again, it just adds to that complication of the payroll taxes. So those are the two things that I can think of that are state related that I just wanted to bring up. Find yourself maybe more than one source of information for those types of regulatory changes. So to wrap it up, by focusing on some strategies, your nonprofit can better weather any financial challenges and continue your vital work. So I hope this was helpful for you today. If you have any questions on this or other topics, please put them in the comments section below. And of course, we always appreciate your likes. I want to thank you for joining me today. And remember, creating a bigger impact starts with stopping the nonsense. If you're dealing with nonsense in your nonprofit organization, we'd love to help you cut through the noise.